Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the first trading week of 2024 for January 1st through January 5th of 2024, where we will strive to help you make more money trading in 2024. So thank you all for joining us, and let's get started. Good morning and welcome, Brian Moritz. Thank you for joining us in the live chat today. Hope you all are doing well. So here's our notes for part one of our weekly trading game plan for the trading week of January 1st through January 5th, 2024. We keep all of our notes for our weekly trading game plans in publicly accessible Google documents, and you can find a direct link to this Google document in the description box below. Our notes contain links to bonus videos, the tools and resources we use to do our market analysis, put together our trading strategies, trade ideas. We keep all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes for this week, as well as our previous weekly trading game plan notes, and you can also find a direct link to that Google Drive folder in the description box below. Welcome to Ricky Khan. Thank you also for joining us today. Hope you're doing well. So let's get started. We'll look at how the markets ended up and for 2023, the last trading day of 2023. So we'll go to the main page of FinViz. It's kind of an interesting day. We could see around 11 a.m. I was a little surprised. It seemed like they started dumping technology, started dumping the Magnificent Seven around 11 a.m. And then they bought the dip, and there was quite a bit of a recovery towards the end of the day. And then we had a little bit of a dip right at the end of the day. So all the indices ended up in the negative. Again, it looked like they started that rotation, that dump about 11 a.m. On Friday. So we can kind of see we had more decliners than advancers, 70% decliners, 25% advancers, although we had 80% new highs, about 18% new lows. We've still got 82% above their 50-day moving average, 18% below, and still 68% above their 200-day, 31% below. So even though this is showing bullish, again, it seemed like they were starting that dump of the Magnificent Seven and technology towards the end of the day. So we see the Magnificent Seven, technology, consumer cyclical, mostly in the red, a little bit of healthcare in the green, but earlier around 11 a.m., again, it seemed like they were really dumping at that point. See some of the news, see stocks closed near record highs. We'll see this in all the indices. Everything's running pretty much at a high. Long bull surge, running into valuation wall. How prices the stock market. So everything, kind of big year short of a new record. So everything running pretty high. Saw oil, we'll see this in the futures. It tested 75, got rejected from 75, bounced back down. We'll see if it comes back down at or below 70. Natural gas is trying to break 250. We saw gold took a run up towards the 2100 level, got rejected. Now it's downtrending a little bit. And we see all the futures on the indices currently pointing down. Treasury yields made a little bit of a recovery on Friday. Again, yields pushed up, prices pushed down a little bit. We see the 10s and 5s are still below 4%, the 30 years above 4%. We'll see in the dollar index, the DXY bounced off of the 100 support level. So we see a little bit of a strengthening of the dollar. Again, it bounced off that $100 support level. And we'll see if it trends back up or hovers around that $100 support level. So let's look at each of the indices in a little bit more detail. Welcome, Sydney Osborne. Thank you for joining us. Hope you're doing well. Sydney says he wants to make more money. Well, that's what we're going to strive to do, to try to help you make more money in trading in 2024. So again, we see, SPY's very toppy. It's been running. We had this exuberant run, since the end of October. So November through the end of the year, it's been very exuberant runs. Moving averages still trending up. So we're still in the midst of the Santa Claus rally. We'll talk about when that ends historically. So again, we see this exuberant run. It's very close to its all-time high. Very topping. Look at the Qs, all going to look very similar. Again, exuberant run, very close to the all-time high. Again, almost a doji type candle. So again, a topping action. Plenty of room above the moving averages. Moving averages all trending up. So again, very exuberant run we've had since the beginning of November. Dow, same thing, broke out to a new all-time high. A lot of strength in the Dow. So again, we'll see in the futures, again, more of a topping action. A lot of room above the moving averages. So the Dow's really made a strong move. The Russell also. Although again on Friday in the futures, we'll see the Russell did downturn quite a bit. So we see that downturn on the Russell. So again, a little bit of a risk off on Friday, but again, it's had a strong move, broke the recent high, still got plenty of room to run to its all-time highs. But again, it's broken out, and we'll see if it can hold that or if it's going to retest that support level again. VIX, not a whole lot of volatility. So again, volatility is still very low. It did bounce up just a little bit. So now we're in the 14s or so. But again, there was not an excessive amount of fear volatility, even with that dump on around 11 on Friday. Look at the sectors. We're going to spend quite a bit of time looking at the sectors and the industries and the groups. And then when we get to our strategies, we'll talk about the traditional kind of rotation from laggards to leaders, leaders to laggards, sector rotation going into the beginning of the year. So that's kind of our expectation going into January, is that we'll see that kind of historical sector rotation. So we see, on Friday, the worst performings were technology, consumer cyclical, and real estate. Again, we saw it's a rotation out of real estate, as well as a little bit of an upturn in the bond yield. So mortgage rates bump up a little bit. The best performers, the least bad, were defensive and energy. So a little bit of a defensive trend. And again, we got a little bit of a bounce back in some of the energy stocks. For the week, though, energy was kind of weak. Again, we saw oil get rejected from 75. So we see a little bit of a defensive sectors, healthcare, defensive utilities, technology kind of in the middle. For the month, though, real estate was strong, basic materials strong, technology kind of in the middle, energy, again, still relatively weak. Quarter, energy was weak, technology, real estate strong. For the year, again, this is where I think the focus for sector rotation, and we want to spend some time looking at the sectors as well as the industries to look for that laggards to leaders rotation. So we see the laggards for the year were energy, consumer defensives, and utilities. This leaders for the year were technology, consumer cyclical, communication. So, again, the Magnificent Seven, technology. So, again, my hypothesis, and again, I'll put my caveat that none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. And welcome, Easy Mike, Flip of the Shippa, MD. Thank you all for joining us today. So having said that, again, my thesis going into the next year along the lines of your traditional laggards to leaders trend is I think we're going to see profit taking, particularly in the Magnificent Seven and technology, et cetera, that have run so much so in 2023, and see a rotation into some of the laggard sectors, particularly energy, possibly utilities. Again, if we get rate cuts from the Fed, that benefits utilities. Again, energy's lagged this year. It was strong in 22, weak in 23. Technology was weak in 22, strong in 23. So I think we'll see that rotation, and that's, again, going to be our focus. So similarly, if we look at the detail of the industries, so we see Friday, uranium recovered, not a whole lot of positivity. See the REITs, oil and gas, negative. Some basic materials, steel, silver and gold were weak on Friday. Again, REITs, again, rotation out of REITs on Friday for the week, though aluminum was okay, biotech, some energy, some REITs. Some of the materials are weak, steel, silver, gold. Again, some of the REITs were weak. REITs did okay for the month. Weakness in silver, again, we'll see it, tested 25, got rejected, down to 24. So we'll see if it continues to downtrend or trends back up. So for the quarter, again, real estate REITs were generally strong. Some energy, gold was generally strong, silver generally strong, steel recovered, weakness, oil and gas. So again, we saw oil get rejected off that 75, bounce down. Again, we'll see if it tests 70, if 70 holds. We'll look at the year, again, looking for that sector rotation. So again, semiconductors very strong, uranium's been very strong, coal. Steel, pretty strong, copper. So the laggards for the year, again, office REITs, some REITs, utilities, again, all the utilities pretty weak for the year. Agricultural products, farm products, agricultural inputs, and then silver, and also solar. Again, solar's interest rate sensitive, so if we get rate cuts from the Fed, and they have tried to run solar based on that expectation of future rate cuts already. But if we do get those rate cuts, that would benefit solar, benefits utilities, also benefits some of the REITs. Again, if bond yields are not as attractive, then your dividend payers, your stable dividend payers get more attractive. So again, we'll be looking for that sector rotation and taking advantage of that laggards to leaders strategy. And again, we'll talk about that at the end in our strategy and trade ideas. So we talked about the indices, the groups, the sectors. We'll talk about some of the economic data that we got. I'll go over some of my highlights. We'll see what economic data is upcoming this week. Let me grab a quick drink and we'll review the economic data from last week and also look at the calendar for next week. Just a quick reminder, as this economic data comes out, I try to post it in the Surf the Markets channel in our Discord as quickly as possible so you can see the natural gas storage numbers, the oil inventory numbers, also again, as the economic data, here's the jobless claims that we'll also review, etc. So our Discord is free to join. You can find an invite to our Discord in the description box below. So again, as soon as I can, as that economic data comes out, I'll post that to our Discord. So that's a great place for you to get, real-time reporting of that economic data. So Monday, markets were closed in observance of Christmas. I hope you all had a great Christmas holiday with your family and friends. Not a whole lot of economic data until Thursday. Thursday, we got jobless claims. This was kind of interesting. Continuing claims was stable and a little up from the previous reporting period. Initial was higher than expectations, and you see there's a trend upward in initial claims. So there is a slow increase in unemployment, but again, not dramatic, pretty slow. Average is pretty stable. We got natural gas storage was down more than expected, same amount as previous, and oil inventories were also down a lot more than expected. But again, the prices of both natural gas and oil declined. So even though the storage supply has decreased, I guess it's the warm weather they're saying. The global instability in the Gulf doesn't seem to be impacting the price a whole lot. So see what else we had this past week. So home prices pretty stable. Housing month to month down a little bit. Bond auctions look like they're okay. Talked about crude oil storage. So we talked about jobless claims. Wholesale inventory is pretty stable. Home sales was down a little bit below expectations. We talked about natural gas and oil. Fed's balance sheet, they can see they're running off some of their balance sheet, but pretty slowly. Baker Hughes count bumped up just a little bit, so that's interesting. The total rig count, so we had been seeing a decline in rigs. Now we see a little bit of a bump up, so that may be some of the drop in prices. Look at the economic data for next week. Again, just a reminder, the markets are closed on Monday in observance of New Year's. So hope you all have a great New Year's Day. We've got some bond auctions, got some mortgage data. Mortgages probably will come down again as bond yields, the 10 years come down. We've got some Fed officials talking. We've got some ISM manufacturing. The JOLTS report might be a little interesting. So Wednesday, also we've got the FOMC meeting minutes from the December meeting. I don't expect anything new to come out of that. We guess we'll hear how much they talked about rate cuts, their view on rate cuts, and we'll see if that changes the prediction of when and how many rate cuts. I know the market's predicting earlier and many more rate cuts than the Fed officials have really indicated. We'll get crude oil, get ADP non-farm on Thursday, and jobless claims on Thursday. So again, a little bit of volatility on Thursday. Natural gas and oil storage. And then Friday we get non-farm payroll and all the employment data. So Wednesday, Thursday, Friday, potential for some level of volatility. Factory orders, ISM. And we've got some Fed officials talking. So again, potential for some volatility Wednesday, Thursday, Friday. Look at the earnings calendar in investing.com. looks pretty light. So some food, some resources, some biotechs. So again, generally looks pretty light. So you can see if there's anything that might impact your plans. Walgreens, so some retail, some pharmaceuticals. Constellation brands, so a mixture of beverages and also cannabis related. I think they have some. They own some cannabis related beverages. So, but again, pretty light calendar in general. So again, markets will be closed on Monday for New Year's Day. So the historical Santa Claus rally we talked about last week is the 5 last days of trading for the year and the first 2 days of trading in the next year. So Wednesday would be the last day of the historical Santa Claus rally. So we talked last week that it looked like the Santa Claus rally came kind of early. Again, I mentioned on Friday it looked like they started that rotation, which typically we see at the beginning of the year. We'll talk about the January effect a little bit as well. It looked like they kind of started that on Friday, right before lunch, but we'll see if that continues when we come back on Tuesday. Again, historically, the exuberance of the Santa Claus rally continues for about 2 days into the next trading year. So that would be Wednesday, and then we'll get more into the depths of the January effect, etc. Reminder: the next FOMC meeting is at the end of January, so we'll see how this economic data changes the predictions for that FOMC meeting. Talked about the earnings calendar. So now we'll jump over to the market screen in Webull. Let me grab a quick drink a second. Just a quick reminder, if you're not already using Webull, you can still get up to 75 free fractional shares of stock by opening and funding an account with 25K or more. Anything less than 25K, you still get 30 fractional shares of stock, each worth from $3,000 to $3,000. So as you see, we use Webull for our market analysis, our due diligence, the majority of our trading. And if you'd use our affiliate link to Webull in the description box below, we would appreciate it. You'll help support our BeachBum trading community, which we greatly appreciate. So I'm using the online browser version of Webull. I'm on the market screen of the online browser version. So we like to look at the advancers decliners histogram. So from Friday, we can see we had, significantly more decliners than advancers, but the percentage of decline was relatively small. Not a whole lot of good advancers. So again, kind of a risk off, rotation. Again, I think a rotation out of the Magnificent Seven. Again, we've seen this money flow out of the NASDAQ on Friday. So we see that pretty steep trend all day. See a little bit of a bump back up at the end of the day. And then we saw a flow into the NYSE, typical trend we've seen for some time. Someone was asking about offerings. You can see the offerings calendar for IPOs here on the market screen in Webull. Also, you can see the near-term earnings calendar as well as dividends calendar here. We'll look at the best performing industries for the week. We see some positive biotech, pharmaceuticals, some semiconductors, some beverages, etc. Some utilities, some drugs, so small percentages kind of across the board. Some real estate, some banking. Look at the ETFs. So right now it's short the Russell, short small caps, short the Dow. There's the dogs of the Dow is positive. Short the Q, short NASDAQ. A little bit of positivity in the VIX, short on Bitcoin. We saw a dump in Bitcoin middle of Friday, and we'll talk about that some tomorrow. I guess a lot of the miners dumped a lot of their Bitcoin. That caused a downturn. So we'll get short on the Russell, short on small cap. Most of the industries, again, pretty red, except for defensive, probably some utilities, a little bit of financials. Commodities, we saw a little bit of rebound in China. Looks like that's a Baltic fund. So we'll see some of the currency. We'll see the rebound in the currencies when we get to the futures. So we'll jump over there and look at the futures. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. So let's look at the futures in FinBiz. I think this pretty clearly shows the topping action in all the indices. So you can see they're all kind of topping and rolling over. So a little bit more so than the NASDAQ. S&P, you see the Russell really made a downturn. So again, they all seem to be topped and rolling over. So we would kind of expect, the last days of the Santa Claus rally, and then we'll get into the, rotation of the January effect. Again, not a whole lot of pop. VIX has been pretty flat. See that test of oil tested 75, got rejected. It's downtrending now. Again, we'll see if it tests at or below 70. Again, natural gas kind of tested about 250. It's trying to break 250, struggling to break 250. Again, gold tested 2100, got rejected. Silver tested 25, got rejected. So we'll see if it holds at 24 and bounces, or if it downtrends. You can see that, it's had a pretty strong downtrend. If it does drop below 24, down to 23, and then rebounded pretty quickly. But again, the general trends of gold and silver still up. Copper's been relatively strong. Looks like it rolled over. See that big rollover in palladium. Had that strong run, and now it's downtrending pretty strongly. We'll see if it bounces off that support level. Corn been kind of flat, downtrending. Wheat's been just chopping around. This looks like it's establishing a new support level. Again, just been kind of consolidating, chopping right now. Saw orange juice decline. Sugar looks like it found a bottom and bounced. And then we saw the bond prices, again, the yields uptrended just a little bit, so the prices declined. Saw the dollar bounced off that 100 DXY 100 level, bounced up a little bit. So all the foreign currencies, topped and rolled over pretty much. Just checking the chat a little bit. Okay, so we'll look at our ETF Google Sheet. So if anybody in the chat has particular topics, indices, categories you'd like to look at, ETFs, please throw those up in the chat. Go over a couple of updates. Let me see, I'll zoom that in a little bit more. A couple updates to our ETF Google Sheet. Just a quick reminder, if you'd like to get access to this Google Sheet 24/7, as well as our dividend payers Google Sheet and our puts ROIC, which is our option strategies Google Sheet, you can gain at 24/7 access to all of those Google Sheets by joining our Patreon at the All Access or VIP level. Couple of additions, updates to our ETFs that I found this week. This one's interesting. Money Mitch on one of the Benzinga shows pointed out a 4 or a 2x leveraged ETF on cannabis, which is the base cannabis one is MSOS. So this is a 2x leverage on MSOS. So that might be a more attractive leveraged ETF to play cannabis. So we'll take a look at the comparison of that to like MJ and MSOS. Another one that's kind of interesting, a relatively new one, is Joseph Hogue pointed out there's a 4x leveraged ETF on, it's actually an ETN on the S&P. So if you really want to get, strong leverage on a long on the S&P, this XXXX is a 4x leveraged on the S&P. Again, we'll take a look at that in the research sheet. Again, it's relatively new. So thank you to Money Mitch for pointing out this MSOX. Thank you to Joseph Hogue for pointing out this XXXX. So let's take a look at those two first quickly. So firstly, we'll look at that MSOX. So here's this MSOX. It's a 2x leveraged on MSOS. So we compare it to MSOS. So you can see the risk reward profile. It's pretty nice. It should, it's about 2 times the MSOS. It's still not really as attractive short term as MJ. So MJ in a very short term appears more attractive, but over a 52-week range, this MSOX looks pretty good, and from top to bottom looks pretty good. So again, it kind of depends if you're looking at a short term or a longer term. Also, this is a little broader than just cannabis, so we've got several different options now for playing cannabis in that space. And we'll keep an eye on those and see if they come back down a little bit, become more attractive, and then we can pick which one is the most attractive for playing that theme. Just quickly look at that 4X one. So here's this Max S&P 500 4X leveraged ETF. So you can see its risk reward profile, not really that attractive. So just again, if I look at the, you can go to the FinBiz, you can get the profile in the ETF database, look at its definition, etc., via the link in the ETF DB URL column. And then we can look at the FinBiz chart in the FinBiz URL, so we can quickly look at its chart. Again, this hasn't been around for very long, so it just started, looks like it just started beginning of December or so. So we don't have a lot of history for this 4X S&P ETN, but it's one we can keep an eye on and see if we want to play the S&P long, another option that we can keep an eye on. So I hope that all helps. Let me check the chat, see if there's any particular categories you guys want to look at. I want to look at the technology screeners. So in the screeners tab in our ETF Google Sheet, as well as tomorrow we'll talk about our Watchlist Google Sheet as well. You can access the technology components. I think this is telling and interesting. So we can see the various technology components. See ARC made a pretty dramatic downturn on Friday. So again, we've been talking about several ways you can short these various components, long or short. These are all the long versions. So the short version of ARC is SARC. So if you caught that downturn with SARC, made a good profit on Friday. So we see ARC made a pretty dramatic downturn. FANG U again tells us that rotation out of the Magnificent Seven. SOXL, semiconductors, not quite as much of a dramatic downturn. Biotech, again, they all downturn on Friday. TECL is the broad ETF on technology. Again, we've held a short. We're holding TECS. We see a little bit of a downturn, not quite as dramatic yet. But I expect going into January, we'll get more of a downturn there. And it's very much more similar to the TQs, which is the long on the NASDAQ more broadly. So again, these more focused segments seem to be rolling over more dramatically. So you can see where each of those, here's ARC. You can see how close it is. ARC made a recent new high and then rolled over. So you can see, SARC. Lab D is the inverse of Lab U. So if you want to short biotechs, Lab D. We've got some Bitcoins. Again, we talked about that drop in Bitcoin. So BITO is the long on Bitcoin, BITO. And then we've got a 2x leveraged on Bitcoin, Bitcoin long, BITX. Talked about the cannabis and MSOX. Easy Mike says sarcasm room. Yeah, plenty of room. We saw that dramatic rollover. So again, if you caught that turn, I think there's still plenty of potential upside in those inverses. SARC, SOXS is the inverse of SOXL. FANG D is the inverse of FANG U. We talked about that recovery a little bit in China. So yen is the long on China. Yang is the short on China. I know we've got some BeachBum traders that you can play that about every day, whether it's a yen day or a yang day. And you can see that one way to see that is in the global chart Webull. I've got some videos that talk about this. So you can see the whether the Asian markets are up or down early in the day, and that may be an indicator of whether we expect a yen day or a yang day. Also the news. Another couple other cryptocurrencies. So again, tomorrow we'll talk that we finally got stopped out of our position in Block. It ran up with Bitcoin, rolled over. So we're now out of Block. We're out of Bitcoin at this time. Talk a variety of ETFs to play energy broadly and or specifically with oil, natural gas. Talked about that, rejection of gold. So if you want to play gold short, there's GDXD, long, GDXU. We're going to talk tomorrow about industrials. So we're watching XLI. So you can see it's very close to its 52-week high, shorting industrials. Again, we'll talk about this tomorrow. You can short with SIJ. So we're going to be looking at SIJ tomorrow. Here's SQQQ. So that's the inverse of TQQQ. talk of oil and natural gas. So natural gas, long boil, short cold. Oil, again, we saw that rejection and downturn, so you can short oil with SCO or drip, long oil with gush or UCO. We got stopped out of our position a while back in USOI, so if oil again comes down below 70, we'll be looking at logging oil with USOI. Again, it's a monthly dividend paying ETN on oil, pays a nice dividend. So we got that dividend for December, got some price appreciation. We'll look to play that again if oil comes down below 70. If you want to try to play palladium and platinum, we saw that big rollover in palladium. So we'll see if it comes back down. Easy Mike and some others talk about potash, so you can see some couple stocks to play potash, see where they're at, their current risk reward profiles. So again, semiconductors long, we saw it, very close to its 52-week high, rolled over. So if you want to short semiconductors, SOX S. Also, there's SSG, so you can see the risk-reward profiles of those. Silver, long AGQ, short ZSL. Again, we're watching this solar, so if you want to play solar long, or again, you could probably short those ETFs when they do that sector rotation in and out of solar. But again, this may be one when they cut interest rates, it may benefit the solar sector. Talked about the broad technology, TECLs long. We're currently short using TECS. And bonds, again, bonds retreated a little bit. So you see TLT was down on Friday, but we saw it's been trending up. So you can long bonds with TLT, TMF. You can short bonds with TBT. Easy Mike's pointing out, that supposed ETF decision on Bitcoin, and that's why it was running up the past couple weeks until, again, we heard a number of miners dumped a bunch of Bitcoin. Again, it's speculative whether those Bitcoin ETFs will get approved, differences of opinion whether they'll get approved or not. So there has been some exuberance, going into that decision. If it does not get approved, there might be some downside risk. If it does get approved, upside exuberance. Playing utilities, we talked about there's an opportunity again for a sector rotation. Utilities right now, they're kind of in the middle of their range. So we'll see if that becomes an opportunity. We've watched UTSL before with utilities. We've also got UPW, and we've got a couple shorts, SDP. So we're watching that again for a potential sector rotation into utilities. Again, wheat's not terribly attractive right now. Watch the yens. Not a great risk reward right now. So let me check the chat and see if I've missed any ETFs y'all want to look at, and then we'll continue. Easy Mike says he went heavy Japan equity. See if we have any specific Japan. So yeah, we've got Japan up. You can see where, they're pretty high right now. Once it hits the top, if you want to try to short Japan, we've got ECJ to long, EWB to short. believe Easy Mike was also previously. We've got you were talking about Chile, ECH. So again, another area going forward, we'll probably take another look at is emerging markets, foreign markets. So here's Chile, ECH. Again, not a great risk reward right now. And I believe you were talking about Australia. We've got the Australian one here in our research tab. So EWA, you can see Australia. A couple weeks ago, we were talking about Argentina's run up as well. Looks like it made a little bit of a retracement. So again, you can find all kinds of ETFs in our ETF Google Sheet. If you have an idea and you're looking for an ETF to try to play that idea long or short, you can use our ETF Google Sheet to search for potential ETFs. If we don't have one and you'd like to ask, we can do the research on those and potentially add them to our ETF Google Sheet. Just put it in the comments. Put it in the comments to this video, or you can contact us in our Discord. Also, Easy Mike's mentioning Mexico, so I believe we have some. So if I want to search for Mexico, you could see the ETFs we have for Mexico. So we have MEXX, and you can see the risk reward profile. So again, that's how you can quickly search for a theme, find the ETFs we have. If it's not in the main ETF tab, you can also search in our research tab and see the risk reward profiles, get more information about those ETFs in our Google Sheet. So I hope that all helps. Okay, so our theme for today is make more money trading in 2024. So let's talk about, how are we going to make more money trading in 2024? And firstly, I want to encourage all of you to think about and post your New Year's resolutions regarding improving your trading and making more money in 2024 in our Discord. I posted this this morning. We do this, every year. Talk about how we can improve our trading. What can we do to improve our trading, make more money trading? So share your resolutions. Get support from your other traders to help you achieve your New Year's resolutions to improve your trading. Got a great community of traders. We can help each other out. That's what we're here for, is help each other out, help each other make more money trading in 2024, and help you succeed in your trading career. So if we have time, we'll talk about that in more detail, possibly review our resolutions from 2023 this week or going forward. So again, we talked about our strategies, and just to jump forward a little bit, we've got several videos about January and the January effect. If you're not familiar with the January effect and kind of the rotation, the effects of the tax loss selling, and then the January effect coming into January, we'd encourage you to watch our video on the January effect, also the January barometer, what that indicates going forward, some of the best performing industries and sectors. So we've got several videos you can watch on that. And again, part of the January effect, again, we talked about tax loss selling the past month, and now we're getting into that period where all those big losers from last year now were the laggards, and if people wanted to buy those back, they may jump into those early in January. So they've taken their tax loss for 23, and now they may well buy them back into 24 because they were the big losers from 23, and they think, okay, it's got more potential upside going into 24. Vice versa, the Magnificent Seven, technology, etc., the ones that ran up big in 23, there'll likely be some profit taking in those. And they don't have as much upside potential. So again, I wouldn't be at all surprised to see profit taking in the Magnificent Seven and technology, etc., and rotation into the laggards, lagging sectors, as well as small caps, the lagging stocks. So we looked at the sector rotation and identified some of the sectors and industries that lagged for 23. So we might see that rotation out of, again, technology, communication services into things like utilities, energy, potentially solar on rate cuts, etc. So we'll be looking for that rotation in the sectors and industries. Somebody from CNBC yesterday was talking, is it going to be from the Mag 7 or the Magnificent 7 to the Lag 7? So again, I wouldn't be at all surprised. Just a reminder, none of our content's financial advice. This is my opinion. But, all of our content's for education and entertainment purposes, and to hopefully help you make more money trading in 2024. So some of the ways that you can identify these laggards, we've done several videos on how to find cheap profitable stocks, how to find cheap value stocks, and we have a screeners sheet in both our ETFs and our Watchlist Google sheet, and I'll show you that in a second. But I'd encourage you to use our how to find cheap profitable and how to find cheap value stocks and FinViz videos as to how to use these screeners so you can find who are the laggards that are still profitable, that are still good value, and possibly trade those going into January as they potentially are ones that people will find attractive going forward into 2024. So again, if I go to the screeners tab in our ETF Google Sheet, you can see I have several of these screeners that I use to find cheap profitable and cheap value stocks. So whether they're more than 90% below their 52-week high, whether they're down 75% for the year, if they're within 3% from their 52-week low. So you can directly access each of those just by clicking on the link in the ETF Google Sheet. We also have these now in our watch list Google Sheet. And then you can go to the fundamentals and say, okay, I only want to see those that are profitable that fit that. And then you can, again, filter down, whether you want a higher PE, if you want only specific industries, etc. So again, you can use these screeners quickly and easily identify cheap profitable and cheap value stocks that may be the laggards that we'll see a rotation into going into 2024. So again, I hope that all helps. One that was kind of interesting that popped up in the within 3% of their low. If we look at that real quickly, I was looking at that last night, and we look at profitable. ExxonMobil popped up, and I thought that was kind of interesting. So if we see, again, if you filter it down to profitable, you've got ExxonMobil showing within 3% of its 52-week low. So you can see it's down near its 52-week low. But if we zoom this out, it's still relatively high. So not really a whole lot of upside. But again, if you want a short-term trade, looking for someone who's near a 52-week low, it's got some potential upside. Again, not a 2-to-1, but some potential with the decrease in oil prices. That was one that popped up in that screener that I thought was kind of interesting. Okay, so we talked about the videos for making money trading in January. We've also got some longer term themes on the winter, so you can hear the videos on how the markets perform in the winter, best performing industries in the winter. We talked about sector rotation. So tomorrow we'll also look at dividend paying stocks, another theme and another rotation that we think will occur. Again, my opinion is I think with the talk of rate cuts, the decrease in bond yields, I think your dividend stocks paying more than the bond yields, for dividend paying stocks paying more than 5%, they're going to be more attractive. Utilities tend to fall into those categories as well as REITs. So I think we'll see money flow into those higher dividend paying stocks, in my opinion. We'll look at some of our option strategies as well. So if anyone else has a last minute question or something you want to look at, I can do that in the chat. If I missed your question or your ticker ETF you want to look at, please throw it back up in the chat. I can look at those briefly. Otherwise, we'll wrap up. See, Flip of the Ship is talking about XBI. It's biotech. Just another quick addition is in our in the sectors sheet on our ETF Google sheet, and also on our Watchlist ETF or our Watchlist Google sheet. I've added both the XBI and the IBB so we can track those independently. So you can see they both, dumped on Friday. Also, you can quickly go to their FinBiz profiles so you can see, long-term performance. So they've had a run. There's IBB. You can compare IBB to the XBI. So again, they've both had a good run during the, November through the end of the year, both peaking out. Dumped a little bit on Friday. So it looks like IBB's got a little bit of a room. XBI's topping out pretty much. And we have some, leveraged ETFs if you're looking for something for biotech, usually shorter term, long lab U, short lab D. And then there's also, we'll look at their dividend payment information tomorrow. So looks like IBB or XBI pays a very small dividend. IBB, a little bit larger dividend, still pretty small. So I hope that helps. Okay. So if you have any other further comments, questions, again, we encourage you to put those in the comments to this video. You can also ask us questions, or if you'd like us to do some research on any ETFs, etc. You can also contact us in our Discord, also on the links, under the links section on our homepage, beachbumtrading.com, bum without the U. You can find our links to all of our profiles, our social media profiles, so plenty of ways to contact us. We hope that you like this content. Please share it with your fellow traders and friends. Let's continue to build our BeachBum trading community in 2024 for the mutual benefit of all of our BeachBum traders. Please let us know what can we do in 2024 to add more value for all of you, our fellow BeachBum traders. Let us know, what can we do to improve? What should we put in our resolutions? And we want to, if we don't see you tomorrow, we want to wish all of our fellow BeachBum traders a very happy new year for you and your family. And we wish you success and great trading 2024. But we hope you will come back tomorrow, same bat time, same bat channel, 10 a.m. on Sundays for part 2 of our weekly trading game plan, where we'll be taking all of this market analysis information, our strategies, trade ideas, to select our top swing trading stocks to watch, stocks in our bullpen, talk about our shopping list, more trading strategies and trading ideas to help us make more money trading in 2024. So we hope this all helps. Hope to see you all tomorrow. And thank you all for your watching and for your participation, and have a great day.